25 years ago, in December of 1997, the first issue of Woodson Wave Report was published, and we are celebrating by offering you 25% off our most popular monthly subscription for a limited time only. Simply type 25 in the discount code box, and you'll instantly have 25% off of the first month issue. You can see here is our website. You click on register. There is register. This page comes up. Fill out all of that nice stuff. Click on the monthly subscription. Note there can be no refunds with the discount code. Come down to the discount code here. Type in 25. Hit apply, and bam, there it is, 25% off. Thank you. Okay, yeah, this is Dale Woodson, editor of Woodson Wave Report. Today is Tuesday, January 3rd, 2023. I want to let you guys know about another thing here in the yellow. We've got the free Elliott Wave principle link there for the book, Elliott Wave Principle by Frost and Prechter. I have a picture of it there. I read that book over 25, maybe 30 years ago. Couldn't put it down and learned everything I know from that book. So I want to let you guys know about that free offer there. Also, let's see here. Don't forget to hit the like button. We won't go through all that video. I want to let you guys get caught up with what we put out over the weekend. New Year. Happy New Year to everyone. Hope it's off to a good start for you. I think we'll get right into our monthly report. We did a review of 2022 and a forecast for 2023. Might be easier just to show you guys all the pictures here. There's a look back at 2022 and a look ahead at 2023. We're looking at wave pattern, price, and time. As you can see here, we've shown this recently. That's the weekly bar from the all-time high. We have the moves down in waves in red, 1, 3, and 5 right there. You can see 2 and 4 up in black. The same with the B wave up. The same with the 2 wave here, and the same with 1 of C down, 2 of C up, and here we are. Not only do the larger waves A, B, and C is in progress, it just began, go in Fibonacci sequences in terms of time, so do the internal waves. You can see here within 1 week, 7, 8 minus 1 up, down, 5 up, 3 up, 2 up, 9, 8 plus 1 up, again 9, 8 plus 1 up. Wanted to point out here, this wave 3, if it gains equality or does a Fibonacci 8 weeks, it will hit a bottom on February 7th. The larger wave C, if we extrapolate out Fibonacci either 21 or 34 weeks, there we have our targets. Are seriously doubt 21 will come into play. That's just a matter of days away. But that's the long and short of last month and this month. We did a recap of the highlights or lowlights, if you will, of 2022, depending on if you were long or short. Of course, we were short the entire year, and we were short against upside targets that never were hit. But you can see some of these exciting or devastating, depending on where you were with the market. NASDAQ dropped 33%, Russell 21%, S&P 19%, Dow 8%. NASDAQ registered its first 4-quarter losing streak since 2000-2001. Tesla down 65% for 2022. It posted its worst month. December, worst quarter, last quarter of last year, and worst year on record, down 69% from the all-time high. Remember, it topped in November like the NASDAQ. Amazon, worst year since 2000, down 50%. GM down 42%. Disney, worst year since 74. That's 1974, down 44%. Nike, worst year since 1997, down 30%. Intel, since 2002, down 49%. The ARK ETF, down 67%, worst year since its inception. Moderna, worst year on record. JP Morgan, worst year since 2011. The SMH, I got it highlighted. We cover that in our video on demand, which is updated once a month. I believe it's $55. We also cover Bitcoin. SMH, worst year since 2008. Bitcoin, down 65%. Discretionary, worst year on record. ETF home builders, worst since '08. Carnival, 60% down, worst year since 1987. IPO, on the bright side, if you will, crude was up 7. Energy, best year on record. Chevron, best year since 1980. ExxonMobil, best year since 1972, up 80%. OXY, best year since 1972. You get the idea. All the energy, oil right there. And the dollar up 8%, best year since 2014. I wanted to make this note because everybody knows 2022 is a down year. Everybody thinks 2023 will be up. It may, but there's no guarantee, of course. But in the 4 times since 1928 that the market has registered two consecutive down years, the declines in the second year were worse than the declines in the first year. Okay, so let's move on here. I won't bore you with all this stuff. There's the C wave targets, and that gets to that 2023 outlook. Okay, so this was, the Dow and S&P topped in January, NASDAQ topped in November, and we had the first A wave down, then we had the B wave up. The C wave is unfolding. C should at least gain equality with A, okay? And it's got 1 down and 2 up, unless and until that high is broken and or the B wave high is broken. C wave is in play. Within that 1 and 2, wave 3 gains equality with 1 at 33.55, and it gains a 1.618 at 28.45, okay? The larger this is A down, there's B up. C gains equality with A at 32.64 and a 1.618 at 27.42. A normal correction in a bull market would be 5 down for A, 3 up for B, and 5 down for C. So it should go to, and if C equals A, 32.64. That's our minimum target, and a more likely 1.618 is all the way down to 27.42. So we'll see how this develops, but I don't know how long that will take, if it'll take a year, but we want to make everyone aware that 2023 could be a down year, or this could hit one of these numbers and then reverse up mid-year. We'll see how it plays out, but that's the bear market, and the previous ones, 2007 to 2009, lasted a year and a half to 2 years, as did 2000 to 2002. So this is virtually exactly a year old. 1.4, today is 1.3. So it's got some ways to go. I would say at least a half year, if not another year. Okay, so there's our verbiage on all that. Okay, there's our Fibonacci time spirals. I want to get into something else here. We had a turn date on 12/4, and 12/1 was one trading day before that, and then the market made a higher high on 12/13. Okay, but it was a nominal high. You can see the 12/1 high here in the NASDAQ, 11,546, 11,571. S&P made less than a point higher, and the Dow made a nominal high. So the point of this is they're rallying it up. Remember, these counter trend rallies, or second waves, if you will, they're there for 2 purposes. The first purpose is to convince the bulls that the bull market is back. That's why you see these sharp rallies up. The other side benefit, if you will, when they try to make most of the traders lose most of the money most of the time, is to shake out the shorts. So they run it up to a higher high, and the shorts go, oh, we were wrong, and they cover, and then they run it down. So they always run it up, at least lately, pretty high, but barely a higher high than the previous one, and then they shake out the shorts and then take it down and pull the rug out from under everyone to make most of the people lose most of their money most of the time. Here's a look at the NASDAQ daily bar. Again, it topped in November of 22. There's our Fibonacci turn dates with the red check marks. You can see that one over there in December. And in the NASDAQ, we have A down and B up, and we have 1-2 of C, and wave 3 equals 1 at 84.84. And we would be short against that wave 2 high of 11,571. NASDAQ, that's another thing. The NASDAQ leads on the way up, leads on the way down. We've said this many times, but the counter trend bounce up didn't even make the 50% where the S&P went to the 618 or higher, and the Dow went even higher than that. And I've got that Dow count in here too. Okay, there's our wave 3 targets. And we're in sell rally mode. We've been that basically all year because of what I said, where they run it up in these second or B waves to convince the bulls the bull market's back and to shake out the shorts. So if you let them rally it up and get short, then you're ahead of the ball game and they're not taking all of your money, which is their idea. Okay, in the Dow, we've got a wave 1 down from the all-time high in January, and then we've got an expanded flat, an A up, a B down. Explanation of an expanded flat is the wave B goes below the start of A right there, and then wave C goes above the high of A. So we've got a classic expanded flat there, A up, B down, C up, and here is where wave 3 targets equal wave 1. Let's see what else do we have here. Bond market, U.S. Treasuries, the 10-year. You can see we had a little bit of overlap there. Wave 3 was equal to wave 1. Direct hit right on the target. There's a wave 4. We're looking for a wave 5 up to 52.33. Anything below this wave 4 low would cause us concern and maybe rethink the wave count because we don't want too much of an overlap there. With this move up, it looks like that low is in, but we need to see a move above the 4.335 to bring the wave 5 target of 5.233 into play. That's what we're looking at there. And then here's our gold market. Okay. By the way, this report's put out once a month for annual subscribers. We cover all this stuff, and that again has a 25% discount. This is a daily bar going all the way back to 2015. We've got a 1 up, a 2 down, a 3 up here, which was a perfect 2.618 multiple, and then we've got the 4th wave. You can see A in red with a circle, B up, and C down, and that's where wave 4 hit like a double low, if you will, or a double bottom, and it looks like wave 5 up is in progress. Here was our targets here. We had a 50% retracement at 16.19, and the actual low was 16.14 back in September. Then in October, it tested it but didn't break it, and it's moved to the upside. So we told our subscribers for this 4th wave, here's was our Fibonacci targets, and we still have the 618 below that, and the make or break for the wave 4 low is the wave 1 high. Okay, so it held and it looks like it bounced off to 50%. We would need to see a move above the 2070 high and the 2075 to get to our 2147 wave 5 target. That's it on gold. I think I may have, yeah, that may be it. There's all the verbiage there. Let's move that back up. Leave you guys, yeah, we had that. Leave you guys with the, oh, I want to show you some more things too. Okay, this is pretty important. This is, by the way, I wanted to mention the black wave count is preferred and the red wave count is the alternate count. Okay, I want to see a minimum of 3 equals 1. That doesn't leave much room for 4 because it shouldn't go above the wave 1 low of 34.91. So I got that. It stays below there, and then wave 5 equals. So we're looking for a move down to at least the 3200s and possibly lower. Okay, let's see what else we have for you guys here. I think I might have some picks, maybe not. Let me look. Bear with me a moment. We can get to the ES. Let's just touch base. Here's a 1-minute chart, which I like to look at. That's let's get back to this before we do. There's that 4th wave triangle on the near term. Okay, and I may be able to show that to you guys here. Okay, there is that wave 2, that blow off top, if you will. Okay, and we've got 2 different counts. This is more near term, black count and the red count, which is the alternate count. And we've got this triangle with this throw over here and the black preferred. And here's the wave 5 targets. All right, we have a 1 down, a 2 up, a 3 down, and I've got that 3 in the wrong spot. There we go. And then an A, B, C, D, E throw over. It's almost a little dicey over there, but so far so good. We'll see if these lows are taken out, okay? And then the wave 5 targets. Alternate count in red shows a completed 5-wave pattern, and that's off a little bit too, but the price is there. Okay, let's move that over if we can. There, it's a little thick for that circle, but that's the wave count. And then we've got an ABC. We've got our retracement targets for wave 2, which needs a circle. You can see the make or break is that high and the 786, 618, 500, and 382, which it just fell short of. And here we go. On the fourth wave, on the E throwover, after a fourth wave triangle, it should thrust out of it to the opposite direction. So 4 was up, 5 down should be a thrust, and there's the wave 5 targets, okay? And I think we have basically the same thing over here. Excuse me, 10-minute bar. You can see how they ran it up. Shake out the shorts. Bull people, hey, yeah, the bull market's back, and then whoop, pull the rug out from under everyone. Here's a pattern we want to see broken. You can see this low here, the B wave, higher low in the D wave, a higher low here. Obviously, it should go because it's a contracting triangle with higher lows and lower highs and the throw over. Well, we want to see, this low broken to the downside, pretty much a double bottom right now. By the way, this is live at 12:13 p.m. on the 3rd. Then obviously this one broken and this one broken to verify that wave 5 down is indeed in play. And there is that 39.0675 on a 10-minute. There it is there. We got a 1 down and a 2. You can see the 1.618. It went through it. And this thing is thrusting to the downside, okay? Not sure that this is an accurate count yet. It's in progress from this morning at 4 o'clock in the morning, but we'll see how this plays out. But again, it looks like wave 5 down is in progress. Okay, sorry for the long-windedness today, but we had a lot to cover, and new year, go over the old year and get the new year prospectus, if you will, or projection, and we'll get into that January monthly right there with that outlook. We'll see if that takes a 1-to-1 or a 1.618 to 1, both the wave 3 and the larger wave C. Those are in play unless or until these highs are taken out. Okay, thank you everyone, and until next time, take care.